Welcome to Retail Retold, the stories behind how that store landed in your neighborhood. I'm Chris Ressa, in conversation with the people and stories shaping retail and real estate. Brought to you by DLC. Welcome to Retail Retold, everyone. Today I'm joined by Bryan Furze, the SVP at Charter Realty. Bryan, welcome to the show.
Thanks, Chris. Happy to be here.
So, Bryan, why don't we just start off? You tell a little bit about yourself to everybody here.
Sure. I am a real estate professional for going on 25 years. Graduated from Notre Dame and got into a brokerage company called Meredith and Grew. That was back in 99. Ended up converting that into a role at an ownership company with a former Meredith and Grew alum. And I joined there to start a leasing role and grew that into basically over the next 3 or 4 years an asset management role where I got involved with leasing, development, acquisitions, financial analysis, some dispositions. And that just became really my passion was really retail real estate, bringing it from inception to full realized value. And I did that for a long time, first at Crosspoint, then at Linear Retail, finally at Federal Realty out of Bethesda, Maryland. I was running the Boston, New York, and Chicago offices out of Boston. And ultimately, about 7 years ago, right before COVID, I jumped over to WS Development and ended up back in my roots running the leasing team for the WS portfolio of core assets, all grocery anchored and power anchored centers throughout New England and Pennsylvania. And so that is my real estate career. I also have a real passion for the environment, and I'm the president of the Urban Bee Lab, and we focus on creating sustainable, healthy environments for pollinators. And finally, I'm a dad and a husband and split my time between Massachusetts and New Hampshire. So
Awesome.
That is my sort of full Rolodex of responsibilities. As Chris mentioned, I'm now the senior vice president of Charter Realty. I joined Charter in May of this year, leaving WS after 7 great years to really grow the Charter office in northern New England, from Rhode Island north up through Maine. And it's been an exciting launch and excited to see where it goes.
Congratulations. So, first off, how many kids?
Just one boy, just started middle school today.
Oh boy.
Yeah.
6th grade?
6th grade.
So I had this weekend was a dad weekend for me for sure. So, my kids are 7 and 8, and 8-year-old daughter, 7-year-old son. He's turned 7 tomorrow, actually. And
Ooh.
we're like everyone else. We've got them inundated in a million activities, gazillion activities. And I realized there was a couple of things like that, like as a dad, I was supposed to do, and I hadn't gotten done because we're always going to this practice and this and that. And one of them was to teach them to learn to ride a bike. And so this weekend, I spent the weekend making sure they could ride a bike. I felt like I was like not doing my job unless they could ride a bike. And it took a bit, but by the end of the weekend, my kids are bike riders now. So
That's fantastic. I'm a huge bike rider, and it took my son until he was, I think, 9. Not an easy lesson to teach. Now he will ride with me, but it took a long time to get there.
yes, we have a little bit of work to do on starting and turning, but getting up and going, we're good now. Not falling off like the beginning. So
That's good.
yes. So you just made this big switch from being a landlord to a broker. Talk to me about that a little bit.
Yeah, it was a really interesting move for me. As I mentioned, I started at a brokerage firm when I first got out of college, and Thought I would be a broker. Joined a sort of a training program in at Meredith and Grew, where I worked in the marketing department, but was working actively with brokers every day and really training for that role. And 15 months after I started, it was supposed to be an 18 to 24-month program. September 11th happened and became a really tough time to get into the office sector of real estate, at brokerage in particular. And so the company recommended that I kind of stay in place. And uh, during the next couple of years, as I stayed in place in the marketing department, I got to work on some really cool development projects with different landlords around Boston and decided that was where I wanted to be. More specifically, I got to work with some retailers. I was helping the retail team bring Wagamama to Boston out of London, and knew that retail was where I wanted to be as well. And I managed to get there. I managed to find a great launching point with a landlord to run a great 20-year career as an asset, the head of portfolios for several really great landlords. But next year I'm going to be 50, and I always wanted to have some autonomy and see if I could do some real estate development and ownership on my own. And candidly, with uh, the amount of time it takes to run a portfolio and work for a powerful corporation, you just can't find the time to really adequately do that on your own. I also was thinking about the fact that I was, probably have 10 to 15 years left before I'll want to start slowing down. And I think brokerage afforded me a really interesting opportunity to potentially slow down in a very scalable and programmed way, so that if I'm not ready to be retired, but maybe ready to be working a bit less, I felt like brokerage gave me the opportunity to do that and really manage my business however I wanted to, from a capacity standpoint. Uh, that came on the heels of some friends having some bad health news and just a lot of stuff going on over the last 4 or 5 years, ever since we all sort of weathered the COVID storm. An opportunity came up. I talked to Dan Zelson for a while. I knew if I did it, it was going to have to be a very boutique shop where I could build my own business and not be having to argue about who knew which client and who maybe had a previous relationship. And I also really wanted the ability to grow something. And Charter afforded me both, with the opportunity to scale the business in northern New England and really come in and be very autonomous in the role. So uh, that and a couple of personal things that happened that allowed us to take some cash flow off the table for a year or two. It was a great opportunity to try a startup business, which is what I consider this, actually.
Awesome. Well, congratulations. Super interesting. Um, I'm still living the landlord life, so if you got any questions or you miss it, feel free to reach out.
Sounds great.
Um, so tell me, you know, you've got long history of landlord lens. Now you've got a broker lens. What are you seeing out there? Like high level retail landscape. What's Bryan seeing out there?
I'm seeing, well, it's interesting. My first 3 or 4 months, by the way, were in the summer, which is always a really interesting time to do anything in this business. But big picture, I'm still seeing a huge appetite for growth with retailers in a very supply constrained market. I do think that our business continues to be under demolished, not oversupplied. I think there's a lot of real estate out there that needs to be rethought, that is instead being filled up with tenants that are paying really below market rents, and that's creating a funny dynamic, especially in the secondary and tertiary markets. Um, and I think that's really testing the theory that consumers need there to be a really strong place for them to go shop when you do see some interesting decisions by retailers to go to less than desirable centers and continue to do reasonably well. But overall, I think that retail is strong. There's plenty of opportunity for um, landlords to go out and find the right anchors. Uh, but the headwinds are also pretty real. I think the construction costs continue to be a huge factor for everybody. Um, the it used to be very easy to do small shop leasing because there was enough space. It's getting harder. We're finding ourselves left with spaces that are close to 3,000 square feet up to 10,000 square feet. That's a very unusual number for a tenant these days. Most tenants want to be 18 to 22 or really above 10,000. That seems to be where the majority of them live now. If you have a 7,000 square foot space, you have to figure out how to demise it. You're basically adding $150 a foot to the bottom line, at least. That's $15, $20 a rent that you've got to add on. So it's just a really tough dynamic. So I think that's a big headwind for us. Feels like interest rates and cap rates will probably start going in the right direction over the next few quarters. But overall, I think retail is strong. There's plenty of a demand for not enough space.
Uh, well said. So you said something that I think uh, some listeners might need some clarity on. You said we are under demolished, not oversupplied. Can you tell everyone what that means to you?
Sure, if you in New England drive up and down a major retail corridor, let's say Route 1 or Route 44, Route 6, any of the usual suspect retail corridors in the state, you'll find some great shopping centers. You'll find some great standalone buildings. But you'll also find that the market's very confused with assets that were built maybe in the 60s, 70s, or 80s that have just never been approved. And they represent assets, in my opinion, that are owned by non-active landlords, passive investors who are cash flowing the asset. They probably have almost a zero basis. The idea of infusing capital into the asset doesn't really make sense to them because they're able to get something out of it in its current state, but it's not competitive. It's set back from the road. It might not have landscaping. It might have too much landscaping. The parking lot might not be improved. The building certainly doesn't have the facade you'd expect. It may not have life safety systems, but it offers a retailer a place to go on the market where they can pay $12 to $15 gross in a market where otherwise you might be seeing $20 to $30 to $40 plus rents, triple net. That creates a dynamic where there's a pull on the market rent from these less improved assets. And so that's what I mean by under demolished.
Well said. Good. Thank you. So, I concur on the supply and demand dynamics. And so what type of work, given all that, are you focused on at Charter? Are you focused on representing tenants, landlords? What are you doing over there?
At the very moment, it's 50-50. I'm also working with some smaller boutique retail buyers, or excuse me, landlord buyers who are looking to enter the market, some younger investors who are just getting started. But primarily I'm working 50-50 with landlords and tenants. I do think at the end of the day, I offer a service to landlords that is hard to match, from all the experience I have as actively acting as a landlord. And a lot of my focus has been north of Boston. I do have some tenants in Rhode Island, or excuse me, some landlords in Rhode Island I'm working with, and am excited to continue to work south of Boston, which is where I live and where I'm from. But I do think there's real opportunity in New Hampshire in particular, Maine in particular, where there's not the same level of institutional investment. They're considered secondary, tertiary markets for investors, and so you don't get the same level of player up there. And I think the retailers, ever since COVID, have really realized that there's a real vacuum for retail in those markets and a huge opportunity to capture sales and capture name recognition, brand awareness. So I'm excited to continue working in New Hampshire and Maine. um, because I think that's really where there's a huge amount of opportunity over the next decade for retail growth and opportunity to get in as an investor while the markets are still somewhat undiscovered.
Got it. Um, I got an asset to talk to you about after this.
Sounds good.
Um, so uh, often this show, one of the things that it highlights is, you know, uh, a story about a deal, and people take a lot from that. And you've worked on a lot. Do you have a story you could share with us?
Yeah, you previewed this with me, so I had to think about it for a while. And there have been some fun stories along the way. But I think the most fun deal that I've worked on is probably also the most challenging deal. I think that probably goes hand in hand quite often. And it was an acquisition. When I was working at Crosspoint bought a 10 building portfolio in the Fort Point of Boston, which, if you're familiar with Boston, you would know the Fort Point is adjacent to the seaport, which has been developed over the last 15 years. So when I was working at Crosspoint, the seaport was a concept. It wasn't built yet. It was still there.
WS was a big
WS
developer
was a
of this
big player.
seaport.
That's right. I sat in every WS, and actually at the time it was Morgan Stanley. Every single Morgan Stanley permitting meeting for those on behalf of Crosspoint. Super exciting. Um, but the deal was really interesting. We got this opportunity to buy 10 buildings in the Fort Point. We knew it was going to be happening in the seaport. It was a single tenant occupied 10 building portfolio that we expected over the next decade would become multi-tenant and have a great retail opportunity. Um, we paid a huge number for it at the time. And I believe our due diligence period was 7 or 10 business days. It was
Wow.
complete insanity. These were warehouse buildings built on fill in the ocean, basically. And it was just it was also July 4th week. So it was just a wild time. I remember listening to fireworks sitting on a bed in an apartment that I was renting because we had sold our house, and listening to the fireworks while I read through this 600-page lease. And we were working with Chris Angeloni, who I think was at CBRE at the time, but in any case, it was Chris. And we had this huge due diligence call, and the call was 90 minutes, and anyone on my team could ask any question. And it was probably, usually didn't do things remote back then, but this was all virtual. We were on conference lines. And someone on my team asked what everybody, including myself, perceived as a really stupid question. Um, and I remember Angeloni called him out on it. He said, we only have 90 minutes. We really shouldn't be wasting time on questions like this. And I said, hey, Chris, with all due respect, we're paying this huge number for this asset, and it's our 90 minutes, and we're going to ask whatever we want. And it was just one of those moments in my career where we got to do something big. We got to do it our way. There were constant issues that we encountered. I think at one point we lost our financing. We had to go find a new lender. But at the end of the day, we got it closed. And it was one of the favorite assets to own because of all the things that it became over the next 20 years. I love walking down that street now and thinking about all that we did to get that thing bought and see what it's become today. So a lot of really fun stories, and a lot of great things have happened over the last 20 years, but that one always rises to the top for me.
Who was the tenant originally in the warehouse buildings?
Thomson Reuters.
Thomson Reuters. And they had a lease expiring?
Yeah, I think they had a fair amount of term, but there was clear opportunity to get the retail podium back, and there was just an expectation that they were going to start to scale down and consolidate certain divisions. So we knew that over the holding period there'd be some opportunity to either add value through leasing or get hammered through leasing. And we really wanted to make sure we understood that.
So at least you're a realist there. So so Thomas Reuters left. What is it today?
I can't for sure say Thompson's not there at all. I think they're not. I know there's multiple office tenants in the building, and then there are retailers on the street. The retail podium came to fruition. You've got all kinds of retailers up and down that road with still more opportunity to come. One of the buildings became a hotel. So
Wow.
it's just it really um, it was a pioneering district way back in the 90s when Thompson went over there, and it continues to be a pioneering district with uh, bringing in retailers to the seaport area that haven't been able to otherwise find a seat. One of them was a grocery store. The seaport continues to be without a proper grocery store, but Crosspoint was able to bring in Trader Joe's a few years ago. So at least there's something there. So it's always been a great project.
Very cool. So, um, we are getting to the end of the show. Um, I've got 3 fun questions for you. Before I do, is there anything we didn't talk about as it relates to retail or real estate that we should talk about?
Well, I'd be remiss in not giving a plug to my little fuzzy bee friends. I think retail and real estate has a real obligation to think about how they can contribute back to the earth, and in ways that are not that costly, and can be quite productive and quite fun. Most commercial real estate owners control huge parking lots and enormous amounts of roof area, and just doing little things like working with your landscaper to make sure that you have a pollinator friendly garden, or landscaping around your site. And thinking about ways to use your roof areas will go a huge way towards offsetting a warming planet and making sure that we'll all continue to have food not only to eat but to sell in our grocery stores. And so, it's something that I'm hugely passionate about. I always have been, and I think we have it as this industry that controls a huge amount of footprint. I think it's important that we all continue to think about how we offset our impact.
It's a really interesting point. I would say, does it feel like in our industry, like, and I'll just call this the going green movement was much more spoken about pre-COVID than now? It feels like we're not, there was all these things about lead buildings and all this stuff, and it feels less today.
Yeah, listen, I think the Green Building Council lead, those were early adopters of making an impact, or offsetting an impact. I think most people that would tell you that lead was led to a lot of good building practices, but was in many ways just a checklist and was a really good precursor to us having a bigger impact. I'm not sure if it was a huge mover, but it certainly was an important initiator and a catalyst. Um, I would say coming out of COVID, I saw a huge emphasis on a lot of companies trying to be better about offsetting impacts in a lot of different ways, and that has fallen off tremendously over the last 3 or 4 years as people got back to business and tried to capture the velocity of it. Um, but another point that has always been problematic in this business is if you offset cost, um, by making an investment, solar, for example, the cost savings go back to the tenant and the cost hits the landlord. So the documentation and the contracts have never really worked to the advantage of the environment when it comes to things like solar and some of the huge expenses. I have been a realist about that. I've been trying to work with the pollinator thing or the green roof movement where, instead of it costing a lot of money, it's really giving back the space that is otherwise not very valuable, so that someone else can come in and make profits or save the world however they want to do it, but it's not costing the landlord a lot of money.
So one of the ways that some interesting companies have gotten uh past this is through clever financing mechanisms. So now in the LED lighting world, there's a lot of companies that your savings in electricity is your payment until the install is paid off.
Mm.
And so
That is
therefore,
smart.
so there's no out of cost to the landlord. And then the savings that the landlord gets goes to pay off for the equipment over some period of time. And I think that's enabled some people to scale. And we've done some of those programs at to, you know, because of the challenge of like, you know, this is ROI dilutive if you, you know, it's not accretive to the business plan here. But we'd love to figure it out. So,
Right. That's great. Good to hear.
yeah.
More
So,
of that.
yeah. All right. I'm going to bring us to the end. I got 3 fun questions for you. Are you ready?
Yes.
Okay. Question 1. What extinct retailer do you wish would come back from the dead?
Blockbuster. In a completely nostalgic way, it was an amazing place to have a first date.
For sure. Question 2. What's the last item over $20 you bought in a store?
Back to school sneakers yesterday.
I hear you there.
And it was
And
way more than $20.
Are we allowed to wear the sneakers outside, or are they only to school?
I don't think there's any way to control once they're on the feet the first time. They had to be clean the first day. That was the rule.
Okay. And then last question, Bryan. If you and I were shopping at Target and I lost you, what aisle would I find you in?
It's a hard question, but I think if I'm going to be honest with myself, it would be the home section. I'm
Okay.
always trying to find some nice towels.
All right. Very cool. And with that, Bryan, thanks so much for being on. Really appreciate it. This was great.
All right. Thanks, Chris.
Thank you. Appreciate you watching. Hit subscribe. See you in the next one.